What is going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over AMC stock. Closing at over $50 per share. Very big win for the AMC apes. Towards the tail end of the day, it did start trailing off, but we did eventually pull through, and it did in fact close over $50. Now, why is this very important? This is important because there's a ton of call options that are going to be expiring in the money for the $50 strike. If we go over to the AMC Options Dashboard here, the dominant strike is going to be this $50 one, and it's going to carry a lot of gamma exposure because all these call options are going to be exercised, and a lot of shares are going to be moving around, especially with all the naked, the short calls. All these institutions shorting these call options, which means they're selling call options without putting down collateral of 100 shares. They're going to be buying back 100 shares in order to provide shares for all these call options being exercised. So very big win for AMC, and I do think we're going to be seeing a nice green day next week due to a nice gamma squeeze right here. So AMC, nice green day, very good. Past week it's up 11%. So we're seeing some really good movement, and in the past month we're up 60%. So we're really seeing a nice uptrend in AMC recently after being super bearish for the past few months, as we can see here. Really nice bounce off of this $30 price point, which is really providing a nice driving force for the momentum for AMC, because a lot of people thought that the $30 price point was a good dip buying opportunity, which causes people to buy the dip, which adds more buying pressure. And since people see the price of AMC gaining momentum and going up in price, more and more people are buying into AMC, which is very good news to see. I'm holding my 100 shares or 200 shares right now, selling some call options actually, just to capitalize on some higher premiums. And that's kind of my favorite strategy, just holding shares and selling covered calls just to collect some weekly premium. I just own almost all my shares. It's a great way to hedge and kind of make money, especially when a stock is relatively flat. So that's a great strategy. Before we get started, take a look at our link in the description for our Patreon. We have buy and sell signals from tons of analysts. Tons of people are making money. This guy made $3,000 off some call options. This guy made some pretty nice profit here, $1,000. So take a look at the link in the description for our Patreon. Tons of great signals there. If we take a look at Stonko Tracker, we can see that there's $92,000 call options at this $50 strike. So this is going to create some nice gamma exposure. All 92,000 of these calls are going to be exercised, and a lot of shares are going to be moving around different hands. So this was a really key price point we were looking at here, because of how many contracts were being how many contracts of call options were out there for this $50 strike. So really nice nice win for the apes, seeing this price point at $50 per share. And the good news is that implied volatility is still relatively low. If we take a look at the dashboard here, implied volatility rank, which just means like how high implied volatility is compared to historical average, it's sitting at a pretty low level, 14, which is very low. 50 is going to be the normal, the median. So we're sitting at pretty low levels of implied volatility, which is good news if you want to play options on AMC. Of course, we always recommend just buying and holding shares. That is going to be the safest and the best way to play AMC. But if you want to play options, you want to be a bit risky, you want to gamble, buying some call options is going to be pretty good, because implied volatility is not that high right now. It's only around just over 100%. We've seen AMC go to sky high levels of 300%, 400%, 500% before. So implied volatility sitting at over 100% isn't that high, which means like premiums on these contracts aren't going to be that high as well. So if you want to play AMC options, you could buy some call options for a few $100 expiring next week. That would be the optimal way to play AMC options. If you are in it for a long term, you could of course extend the expiration date to say January 2022, and it's going to cost you maybe $1,000. So these options are going to be a bit expensive. A lot of people are buying more long-term options because they do think that AMC is going to be more of a long-term play, which I do believe as well. So the premiums are going to be a bit higher if you go further out in the expiration date. Implied volatility is going to be higher as well, at almost 150%. So that would be a nice way to play some call options. But of course, I highly recommend just buying and holding shares. And of course, favorite strategies, selling cash secured puts. And keep in mind, at 3,000 subscribers, we're planning on releasing a Discord server. I am going to basically give out all my trades for free. I do a lot of option selling. Goal is around 1 to 2% per week, and we're up 5% in the past month. So really, really nice profit here. Tons and tons of cash secured puts. Pretty much all cash secured puts, as well as covered calls, but I'm not going to be alerting those covered calls just because a lot of people just don't want to buy and hold 100 shares. So we're just alerting the cash secured puts here. And this is for 2021. This previous one, 100% win rate, lots of profit here. But for 2021, we're off on a pretty good start. We of course did that lotto play with FBRX, and that did take a pretty big hit. We lost a few $100 with that, but we're completely transparent. And this is going to be all on our Discord server when we hit 3,000 subscribers. So keep a lookout for that, and of course subscribe if you're new to the channel. But AMC, if you want to do some cash secured puts, very, very good strategy to buy some stock at a cheaper price. And we're probably going to be selling some cash secured puts next week. Premium's looking pretty good. Of course, our goal is around 1 to 2%. So what I'm looking at is like a $42 cash secured put, or anywhere between a 42 and 45. Depends what we're going to be doing. But pretty good premiums right here. Really good chance of profit. And it's a really good dip buying opportunity if I want to get some more shares at a nice dip. So we're looking forward to selling some cash secured puts for next week. And basically, if you don't know what a cash secured put is, in short, this is how it works. If say we do sell a $42 strike, we're going to be collecting $50 of premium, but we have to put down a collateral of $4,200, which is going to be the strike price multiplied by 100, and that's going to be required in order to sell a cash secured put. So there's two scenarios here. If AMC stays above your strike price, in this case $42, the contract is going to expire wordless, which means you collect your premium in full, which is going to be $50. If it goes below your strike price at expiration, this contract is going to expire in the money, and it's going to exercise, which means you have to buy 100 shares at your strike price. But regardless, you're going to be collecting your $50 of credit no matter what, so you can do whatever with that. So this is a really good way to buy the dips. Warren Buffett's favorite strategy. He sells cash secured puts on a daily basis. But overall, very good dip buying opportunity, because if you outright buy 100 shares, your cost basis is going to be $50. But if you sell a cash secured put at $42 strike, your cost basis could potentially be even lower at $42 each. So that's why it's my favorite strategy, and it makes money in flat markets as well. So that's about it for this video. If it helps you in any way, please leave a like, comment down below what your thoughts are on AMC, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.